All right, guys, welcome to our first live lecture for ACC 220, and this is part of the mega course. So there's multiple lectures that you can access, as well as we have live lab sessions. And I know a lot of you I've had in the past, so typically how I try to do my live lectures is like 20 minutes on the PowerPoint, 20 minutes on the assignment, and then 20 minutes on the assessment, giving you some pointers of what to expect. But with the mega course, if this is your first time ever taking it, if you see on the screen right here, click here for schedule. If you click that, and once it loads, there it goes, it will give you the schedule for the live session. Let me get that microphone. There we go. It will give you the schedule for the live sessions, and you see there's multiple ones. So this one you can see is 6 p.m. That's our instructional session. The other sessions are open lab times, which what this means is during those times you can come, like from 4 to 5 p.m., you can come with your specific questions, and the instructor will be available to answer them. So I believe this one is the only instructional session. And yes, it is. You can see the Monday session is the instructional session for the week. The remaining are open lab hours. Essentially, you come and you can ask questions. So just if you're not familiar with the mega course, I always like to point that out for you guys. All right, so I might as well just jump right into it. Start with week one since we have a limited time and a lot to go over. So week one, we're looking at chapters 1 and 2 of the book, which deal with an introduction to accounting. And I don't know if many of you, do you have accounting experience? Or is this the first time you're ever seeing accounting? I mean, it's all right if it's the first time, since it's okay. Yeah, that's fine. I mean, if it's, and you see, it may be overwhelming at first because there is a lot of information, but the more you see it over and over, I mean, I was the same way when I first took accounting, is I didn't know. It was just a lot of information, but when you see it over and over, it starts to make sense. And you always hear accounting referred to as the language of business, and that's actually the discussion question for the week. Okay, so we have first time, several times, so that's a good mix. But the discussion question, and I can see some of you have already participated, which is great. It deals with accounting as the language of business. You know, you can see here's a question here. There's a video for you to watch on accounting as well. And for this one, you're supposed to consider your current job position or your future career goal and research how accounting relates or will relate and why it is important for your success to have this fundamental understanding. I mean, with accounting, even if you're not going in the career of accounting, it's still valuable to know, because no matter what in life, you're going to encounter accounting, whether it's in your personal life or in your profession. Like, even if you don't go into accounting or business, like say you go into the health field, well, if you work your way up into like healthcare and you become a manager, most of your decisions are going to be made off of financial reports. So it's important to have that. It's important to have that financial accounting understanding. It will give you that competitive edge. Yeah, this is ACC. It's titled ACC 220, but it's a mega course, so it still is ACC 101. I know it's very confusing, but this is a accounting 101, elementary accounting. So yeah, I know that, honestly, that even confused me when they said this about the mega course. They're like, you're teaching ACC 220, but it's ACC 101. It's combined. So it's, yeah, don't worry. It is ACC 101, elementary accounting. So with your discussion questions, all the information, and I accidentally clicked the video and my screen's going nuts. Okay, get out of that. With your discussion questions, you can see all the requirements are right here saying, be sure to post your 150-word post by Wednesday, citing at least one citation in APA format. So with the posts, you should have a total of 3 posts. You should have an original post totaling 150 words by Wednesday at midnight with at least one reference in APA format. And then you should have 2 replies to students of 50 words each by Saturday at midnight. And you should post on different days. Like, you should at least post on 2 separate days. So if you do that, do it on time, it's the length, you hit on the content, then there's no reason why you shouldn't get a 60 out of 60 on the discussions. So very important to follow these rules that are right here. So that is your discussion for the week. And like I said, it focuses on accounting in general and how it can help you in the future. Because I know a lot of you aren't all accounting majors. I know there's some business majors, but it's still important to have that general understanding of accounting. So that is your 1 graded item for the week, the discussion. You also have your daily checkpoints. And let me actually go back. Easier to get them from the home screen. They are right here. If you click daily checkpoints, it will take you to the list of the checkpoints, and they're only open for that specific day. Like you can see, today's Monday is only open today. Same with Tuesday, Wednesday, Thursday, etc. Hence the name daily checkpoints. So these are 5 points each, and essentially what you have to do, we'll give you a video or a paragraph that you have to watch or read, and then after you watch or read it, then you take the quiz, which is 1 question, and it's 5 points. So very important that you stay up to date with those, because those can help your grade dramatically, especially since you only have to complete 4 during the week, and then the other 3 are considered extra credit points. So if you do all of them and you do them correctly, then you can get up to 55 extra credit points. You might have, Mike, a different teacher, because this is our mega course, so it's combining all of the accounting classes, and I think there's 10 sections. That's why there's so many people in the lecture tonight. So I might not necessarily be your instructor, but you still have the same instructor. I'm just the one, I'm teaching the same class as him or her, but I'm doing the instructional piece while they're doing the lab hours. Does that make sense? Okay. Yeah, I know it's confusing at first, and I was surprised by the amount of people in the lecture, because usually there's only 1 or 2, but then I realized there's 10 sections of this class, so then it made sense why we have about 10 people in the lecture tonight. Yeah, and you may have a different instructor, and I always say go to them first if you have questions, obviously, if you're stuck on the material, but you can also contact me too if you need help. Just make sure to reference that you're not in my class, you're in so-and-so's class, and my contact information, because you guys won't be able to see it, is right here. You can see there's my email and there's my phone number. So even if you're not in my class, you're in a different section, Feel free to email, call, or text me if you have trouble with something. But again, just reference that you're in a different instructors section. So those are your daily checkpoints. Again, the first week I just like to do introductions, where everything's at, because I know this is a lot of people's first class too. So went over the graded discussion, went over the daily checkpoints. There's also an introduction this week. This is not graded. You do not have to participate, but I appreciate everyone who does, and I encourage you to participate because it gets your what's the word I'm looking for? It gets you to know the other students better, and they get to know you as well. So I always encourage everyone to do the introduction, just a short little introduction. You can see mine's right here. But if you don't participate, it's not going to affect your grade because it's not graded. So that is your introduction discussion. So discussion, introduction, daily checkpoints. And then this week you also have an assignment worth 120 points and an assessment worth 50 points, which we'll go over a little bit of the assignment as well as the assessment. But before we get into those, let's hop into the PowerPoints, which are also under reading and tools for you guys. You can see here's chapter 1 and 2 PowerPoints, which I'm going to bring up now. So do you guys have any questions for me before hopping into the PowerPoints on the class in general or anything? Okay. Just always want to make sure, and like I said, if something pops up where you have like a question later on after the lecture, like I said, don't hesitate to contact me. Okay, so chapter 1, we're looking at what accounting is. Like I said, you're here often referred to as, I never like to go into the PowerPoint show, so I always just, the slideshow, so I always just zoom in. You're always here referred to as the language of business. And what we're going to look at is the definition of accounting, what careers you can go into accounting, and the users of financial information. Because a lot of people misinterpret really what accounting is. So in running a business, you need to have answers to various questions. How much cash do you have in the business? Probably the most important one. How much cash do you have in the business? Because as I always say, and you'll hear this in finance, is cash is king. If you do not have cash in business, then your business is doomed. No matter how good your product is, you could have $500 million in sales, but if your profit margins are low and you're not bringing in cash, then your business isn't going to survive. You also need to know, how much do your customers owe you? If someone owes you $10,000, well, that's a pretty good chunk of change. You need to know this, and you don't want to lose track of that, so you sell a service and you never get paid. The cost of your merchandise, your sales volume, how much is owed to suppliers, again, vice versa of customers, what you owe someone. If you owe someone $20,000 and you don't know, and 6 months later they hit you with a $20,000 bill, it could affect your business greatly. And of course, what your profit and loss is, if you're making money, if you're not making money. So these are questions that you need to ask yourself, and this is what accounting helps you answer. Because like I said, as you move up in a company and you become more of management, you'll see that your tasks switch from really analyzing numbers, which is essentially what accounting is. Like, a lot of people see accounting, you ask them, what is accounting? And they're say, numbers, math. And while that is part of it. It's not near all of it. Like, a lot of people think accountants just sit in a room and crunch numbers. It's actually the complete opposite. Like me, I've worked at an accounting firm for almost 8 years, and right now I'm a senior assistant controller. And there isn't a day that goes by where I'm not dealing with people. Like, I'm constantly out at clients, talking to them about their financials. Like, what really makes you valuable is if you can read and interpret the financial numbers. And that's what accounting is. It's the process by which information about a business is classified, recorded, summarized, interpreted, and communicated to owners, managers, and other interested parties. And I can't stress the communication part enough. That's what makes you valuable. If you can not only read and analyze the numbers, but then you can communicate it to others and explain what's going on and explain, oh, well, this is why this is down, this is why this is up, well, etc. So don't get accounting confused when people will call you bean counters or, number crunchers, or just say, well, it's math and numbers. It's really not. It's analyzing and interpreting the financial information. That's really what accounting is. A lot of analysis. There's various jobs you can do in accounting. Accounting clerk, bookkeeper, accountant. I mean, there's auditors, there's forensic accounting, there's controllers, staff accountants, accounting managers, and then, of course, a lot of people who work in accounting will move up into CFO positions, or they'll move up into vice president positions. You notice a lot of upper management people in business, they all have some sort of accounting background, like whether they started in accounting or have a bachelor's degree in accounting. That's why it's such a good degree to career to go into, because it can branch off into so many areas. That's why accounting's so valuable. Now, there's two types of accounting. There's managerial and private accounting. Managerial or private accounting versus public accounting. So managerial accounting, or known as private accounting, means you're working for a single business. Like, you'd be the accountant for UPMC, or the controller for Bank of New York Mellon, or an internal auditor for Heinz. You work for that company. That's your only client. You're only concerned with their records. Public accounting, and let me see if it's on the other slide. No, it's not. Public accounting deals with many clients. Like, I work in public accounting, meaning I not only work for Donnelly Bolin and Associates, but I have various clients that I do the accounting for. Like, I'll go to my one client, which is a school district, and then other days I'll go to my other client, which is a government agency, or I'll go to the law firm, my other client. So I have various clients. That's public accounting. And typically people who work in public accounting are ones involved in tax season. Public accounting, I can tell you, is very stressful, but at the same time, you learn so much in it and you meet a lot of people. So you'll see a lot of people will spend maybe 3 to 5 years in public accounting, get the experience, and then move into private accounting. I don't know what I'm thinking. I'm still in public accounting, and it's been 8 years, but I haven't made that switch to private just because I like public accounting so much, because there's so much to learn. And again, you make so many networking connections. There's also governmental accounting, which this deals with, as you can guess, governmental units, federal, state, and local level, Securities and Exchange Commission, IRS, FBI, Department of Homeland Security. Like government units, like the courthouse would be another one. CIA would be another governmental unit. All right. Sarbanes-Oxley, you'll hear this a lot too. This was an act that changed the accounting profession around a lot. It put a lot more regulations in place, and I think it was enacted around 2002 when all those accounting scandals happened. If you remember, WorldCom and who was the other big one? I'm drawing a blank. Enron, that was the major one. And after those financial scandals happened, then it led to this Sarbanes-Oxley Act being passed, which put more oversight and regulation on the industry. Three major legal forms, and you hear these all the time in your business classes, which I'm actually going to go to the next page because it has a good comparison. But it's sole proprietorship, partnership, and corporation. And each one has various distinctions. Like sole proprietorship, you have one owner. That's one sole owner. And you typically, at the end of the year, will complete a Schedule C on your tax return. And the life, it ends when the owner dies or is unable to carry on, and the person responsible is the owner. Partnership, as you can guess, the difference between a sole proprietorship and a partnership is it's two or more people. Two people go into the business. It ends when one partner dies, closes, or withdraws. And again, partners are individually and jointly liable for the debts. Corporation, that can be one or thousands, and it continues indefinitely. If someone dies and passes away at, again, use the example of Heinz isn't going to close down. It's going to continue on, and stockholders only lose the amount invested. So if you bought stock in Apple, and that business closes, you're not responsible for their debts, but you lose the money that you invested in the company. And the last slide, generally accepted accounting principles. And I actually lost my place. Generally accepted accounting principles. You'll hear this a lot, and I believe it's one of the questions on your assessment. These are the accounting standards developed and applied by professional accountants. Essentially, these are the rules and regulations that you follow in the accounting environment. Are there any, I know I went through that pretty fast, but I'm sorry, I'm clicking the wrong things. Are there any questions on that? And that was just like an overview, chapter 1, like I said, getting an introduction of accounting and the career choices and everything with it. And feel free to chat like in the message box if something doesn't make sense, or interject or ask questions, anything. Told you I do not like reading from PowerPoints. That's why I don't really read from the whole slide. I just try to give you the gist of it and then apply like my personal knowledge. And plus, I like to focus more on the assignment and assessment as well. Okay, so that's chapter 1 then. Chapter 2, let's see if we can get through all of these, because again, I only want to spend roughly 10 more minutes on these PowerPoints and then hop into the assignment with you guys and give you some information. So now chapter 2, we're going to look more into analyzing transactions. look at assets, liabilities, and owner's equity, which are the main accounts as well as revenue and expenses in accounting. So when analyzing a business transaction, financial, you want to describe the event and then make sure the equation is in balance, meaning your property or asset equals your financial interest, which is your creditors and owners. Essentially, the accounting equation, assets equal liabilities plus owners' equity. And let me hop to that slide because it's way down here. The fundamental accounting equation, which is probably the most important thing to remember. Assets equal liabilities plus owner's equity. What you own equals what's owed to you plus your financial interest. So anytime you do an accounting transaction, this should always equal, just like your debits and credits should always equal. But your debits and credits are next week. We won't get into that right now. So assets equal liabilities plus owner's equity. And assets, those are what you own, like a house. That would be an asset. Equipment, car, those are all assets. Liabilities, that's the opposite of assets. That's what you owe to someone. That's your debts or obligations. You know, your mortgage, your credit cards, your auto loan, your business loan. Those would all be liabilities. Owner's equity would be your financial interest in a business, essentially your net worth, like your equity, your investment. Like, for instance, your house. If you bought a house and have a mortgage on it, but you put $50,000 down on the house, well, then you have $50,000 equity built up in the house. And as you pay down that principal and interest, your equity builds up. So your balance sheet represents your assets, liabilities, and equity. It's a formal report of the financial position of your business on a certain date. It reports your assets, liabilities, and owner's equity of the business. And this is an example of your balance sheet. You can see here's your assets, amounts and types of property owned by the business, cash, inventory, prepaid rent and equipment, liabilities, what's owed, which are accounts payable, and then the equity, the owner's interest. And you can see assets 103,500 equal total liabilities and equity of 103,500. And we looked at the equation, assets equal liabilities plus owner's equity. And this equation is represented on the balance sheet. As you can see, assets equal liabilities plus owner's equity. So now your revenue and expense, and actually I'm just going to go to an example of the income statement. This is your income statement. This shows your revenue and expense, which revenue is money coming in, inflow of money. Expense, outflow of money, cash going out the door. The income statement shows your profit or loss, your revenue minus expenses. So if you have revenue that's higher than expenses, you have net income. If you have expenses higher than revenue, you have a net loss. So your income statement represents your revenue and expenses or your profit and loss. And those are the two main financial statements that every business will use: the income statement and balance sheet. Another financial statement that businesses will use, which again, as you move up in your classes, you look at more cash flow statements, but that's probably the other big statement that businesses look at, because the number one question that any client asks me when I go to them is they want to know their cash position. That's always the first thing they want to know. And while your income statement shows your profit and loss, that's not an accurate indication of your cash. Because if you have non-cash expenses on there like depreciation and interest, or if you have revenue numbers that are made up of accruals, then that isn't really cash flow coming in. That's showing how profitable your business is, but it's not showing cash coming in the door. So don't get an income statement confused with a cash flow statement. And typically cash flow statements, every software that I've used never generated them accurately. You always had to build them outside the software. But I just wanted to, again, we're not looking at cash flow statements, but I always just like to throw that out there. Statement of owner's equity. This is another statement some businesses will use, but not all the time. It essentially shows your owner's equity balance, which is your beginning capital plus your net income, because your net income or net loss gets rolled up into equity, minus withdrawals, and then you add that back into capital and you get your ending capital, which flows into your balance sheet. A lot of time companies won't utilize this statement. Instead, they're just usually just drill down on the detail on the balance sheet, because you'll see what I'm talking about in the next slide, which is how these statements flow into each other. So the income statement, you always have to build first, the balance sheet last, because your income statement gets your net income. And your income statement is made up of what's called temporary accounts, revenue and expenses, which means they get closed out at the end of the year and rolled up into the equity portion of your balance sheet, into your permanent accounts. And you can see that depicted in this slide. You can see your net income of $38,350 gets rolled up into your statement of owner's equity, your equity account. It takes beginning capital plus your net income minus withdrawals to get your ending capital. And then that ending capital gets rolled up into the balance sheet. So you can see how they feed into each other. And again, the whole point of that is income statement accounts get closed out at the end of the year and rolled up into the equity portion of the balance sheet. Did I confuse and bore everyone, or does that make somewhat sense? Good. Oh, good. I got a lot of, I'm glad I didn't get good, all somewhat. Glad I didn't get completely lost. Like I said, if it's the first time seeing it, which it's probably the first time for the majority, if not all of you, then it's good that it makes somewhat sense. So, with that said, let's hop into your assignment. I'll give you some pointers on the assignments and then let you guys finish the rest for your homework. And then I'll also give you some pointers as what to expect on the assessment. All right, so your assignment. Let's pull this up. So your assignment is worth 120 points. And like with your assessment, it's due Saturday at 11:59 p.m. Mountain Time. So it's due the 20th. So that's why I like to have these lectures on Monday night, because you can listen to the lecture, get pointers on the assignment, and then get it in as soon as possible. So essentially you have all week to complete the assignment. So this is a template that you're going to use. Just open it. All right, so the instructions are right here. Using the accounts listed below, which are right here, you can see here's your assets, here's your liability, here's your equity, here's your revenue, here's your expenses. So utilizing these accounts, you have to identify the account affected given the increase and decrease information, and 10 points for each for a total of 120 points. So for instance, you can see you have 12 questions. And then you also have 2 extra credit questions. So let's look at the example and look at a couple of these. So you issued a check to pay for the current month's rent. So you have to tell me, based on this, which account increased and which account decreased. Just think of it as your personal, think if you were doing it personally. If you issued a check to pay for your current month's rent, what is going to happen? Well, if you issue a check, that means money is going out the door. So that would mean your cash is going to decrease. And since you're paying for rent expense, that means your expense is going to increase because you're paying with the check, so your cash is going to decrease. And since you're paying an expense, your rent, that expense is going to increase. Just get in on mic. I see we have 17 people. Oh, see, how come liabilities are not subtracted from owner's equity? And that's because, remember, your equity is your asset. Assets are what you completely own. That's your complete investment. Like, think of it as a house. Like, you have a house, total value of $250,000. You pay, you take out a loan for $200,000 on it. So you put down $50,000. That means your assets are $250,000. That's your total assets. So that means if your total asset is $250,000, that means your liability, what's owed on it, and your equity, your financial interest, what you have at stake in the asset has to equal. So that would mean your liabilities are $200,000 and your equity in the house is $50,000. Which would satisfy the equation assets equal liabilities plus owner's equity. Your rent, these are all very good questions. Your rent would increase because it's an expense going out the door. Like, think of it from a business perspective now. If you said, if you had to pay rent, then you're going to debit, I know I'm getting into debits, your rent expense, and you're going to credit your cash, which means you would increase expense and decrease cash because you're paying an expense. So that means you have to recognize the expense on your books. So your expense would increase. Does that make sense? Because you don't want to think of it as an asset. Remember, the expense isn't an asset. It's just to track your expenses. So it's saying, oh, we had rent expense of $1,000 this month. Next month, it's another $1,000. Then the following month, it increases to $1,500. Okay, good. Yeah, these are all very good questions. So now the next one. I'm going to do a couple of these with you guys to get you off on a good foot. So you're starting the business. The owner invests their personal cash savings into the business. What two accounts increase? So again, if you're investing, and I heard a mic. So if you're investing cash into the business, your personal cash into the business, so you have to think of it, okay, I'm putting $10,000 into the business account. What is going to happen to the business account? Exactly. Oh, perfect. Yep. Equity and cash are going to increase. So J. Jones capital increases and cash increases. Exactly. Well, you guys are definitely catching on to this. It's very good. Yeah, your cash is going to increase because, again, think of it. If you're opening a business and you're taking $10,000 of your personal money and putting it into the business account, then your cash is going to increase and your capital is going to increase because your capital represents the money going in. And as Crystal said, why not drawing? Drawing is if you take money out of the business. So if the owner withdrew $5,000 from the business, you have to increase the drawing account, which would then decrease the capital account. And that sometimes confuses people. Like there's two portions of owner's equity. There's capital and there's drawing. If you invest $10,000 into the business, you would increase your capital account. If you decided I want to withdraw $5,000 out of my business account for personal use, well, you can, since you have capital of $10,000. So in that case, you'd increase drawing by $5,000. And then those two net together, you take capital minus drawing, and that becomes your ending capital balance. So your drawing accounts is only if you're taking money out, you'd affect drawing. Your capital account is if you're investing money in. Very good. Very good questions. So now the next one, very similar to our example, if you issued a check to purchase supplies. Again, think of it. If you're issuing a check, what's happening to your cash? Exactly, Kelly. Increase supplies, decrease cash. Perfect. You would increase supplies, decrease cash. Again, cash is going out the door, so you're decreasing cash. And then supplies, you would increase because you're purchasing supplies. And I don't like how they use supplies as an asset. Typically, you see supplies be called inventory, but in the book, they use, can't get rid of that. In the book, they use supplies because a lot of times you see supplies called supplies expense. And just getting the mics, that's all. All right, so now let me, before I go into the next one, you also have two accounts in here called accounts receivable and accounts payable. Yeah, I mean, typically, and that's probably the case, like you see those interchangeably, supplies and inventory. It's just I don't like how they use supplies because a lot of people will use supplies as expense, but you can use either one. Like you said, Kelly, typically they're probably speaking in terms of bulk supplies, like you said. So there's also two accounts called accounts receivable and accounts payable. Accounts receivable is an asset. Accounts payable is a liability. A lot of people get these confused. Accounts receivable is what customers owe you. It's essentially accounts that you need to receive payment on. Accounts receivable, what someone owes you, what customers owe you. Accounts payable are the opposite. They are what vendors you owe. They're accounts that are payable, accounts that you have to pay. It's what you owe to someone. It's a liability. So, that being said, number 3 deals with purchasing computer equipment on account, also considered on credit, due in 30 days. So you purchased computer equipment, but you didn't pay for it in cash. Instead, you said, I'll pay for it at a later date. I'll owe you at a later date. So based on that, I'll give you the one account that's going to increase. Right. Asset and liability. And here, another mic. There we go. Asset and liability. That's correct. An asset's going to increase and a liability is going to increase. And then Kelly took it one step forward, one step more, and said computer equipment and AP, and that is correct. You're going to increase your computer equipment, which is an asset, because you're recognizing the asset that you bought, and then you're going to increase accounts payable, which is a liability, to recognize that you still owe that money in 30 days. So I'm going to skip this one because that one's very similar to other ones we looked at, and I want to get through to some of these other ones that are a little more difficult. That one's pretty easy. Okay, so let's look at 6, because you have to involve transaction 3. So if you issued a check to pay on account due from transaction 3. So transaction 3, remember, we owe this money, this account's payable. Now in transaction 3, we're going to pay that. So what 2 accounts are going to decrease? If you're paying a debt back, Exactly. Exactly. Teresa and Kelly, AP and cash. Cash is going to decrease because it's money going out the door, and accounts payable is going to decrease because you're paying that debt back. So you have to decrease your accounts payable to show that you paid them and don't owe them anymore. Trying to pick out a couple more for you. I guess I'll ask you guys. Which I'll do two more with you guys, including the extra credit. So actually, since there's a lot of people in the class, so I imagine I'm going to have a lot of different ones. So I'll do first come, first serve. So 10 is one of them. One more. 10 and 12. Okay. All right. So let's look at these ones. 10 and 12. So you receive a payment from charge account clients. What charge account clients means is you received payments from someone who originally purchased the service from you utilizing accounts receivable. So if you're receiving a payment from them, keep in mind it's a payment, not revenue, what account is going to increase and what account is going to decrease? And this one's a little tricky. Cash, exactly, that's the first one. And then Kelly got the other one, which is AR. Because again, money's coming in the door because you're receiving payment, cash. So your cash is going to increase. And you're receiving it from people who bought stuff on account. So it originally increased your accounts receivable. But since they paid, you have to decrease that accounts receivable to show that they don't owe you that money anymore. And the last one Marcia wanted to look at was 12, and this is a very good one because this tends to confuse people because it deals with the drawing account. But I sort of explained it at the beginning, or no, I really didn't. So this is actually a very good one. So you issue a check to J. Jones as owner as a draw for personal use. So if you, the business, issued a check to J. Jones as a draw, what account is going to increase? What account is going to decrease? Remember, you're issuing a check from the business. So what's decreasing? If a check is going out the door, what's going to decrease? Cash. That is the correct answer. And this, you can tell this one is where it gets confusing because it doesn't deal with any expense. This deals with cash and drawing. So what's going to decrease is, think, the business is cutting a check from the business. So that means if you're issuing a check, your account is going to decrease. But this is where it gets confusing, is your capital account as a whole decreases, but your drawing account increases. So the account that would increase would be J. Jones drawing. Exactly, Crystal. Because remember, J. Jones drawing tracks the owner draws. And remember, the owner draws decrease your capital account. So go back to the earlier example. If you had capital of $10,000, withdrew $5,000, you'd increase drawing by $5,000, but then you net drawing against your capital to get your ending capital balance of $5,000. So that's probably the hardest one. So that is a good one to pick. So you guys have a very good start on this. You can see you only have 1, 2, 3, 4, 5, 6 more to do. So you have half of it done, and then you also have 2 extra credit that you can do, which are 5 points each. And if you're doing this and you have any questions on the assignment, like you're stuck or completely lost, please do not hesitate to email, call, or text me. I'll gladly help you. And also, again, remember the lab hours that you guys have. Take advantage of those. And that's fine. I mean, I expect you guys will have lots of questions, so simply email me, and the more specific you are, like, hey, I'm having trouble with problem 8. Can you explain, what I have to do? And I'll gladly help you. So yeah, that's more than all right to ask questions. All right, so I'm going to close this. And then I know we're coming up on the hour, but I'm going to go a little over because I really want to give you guys a few pointers on the assessment. So typically what I like to do is just, for like 10, 15 minutes, just give you some pointers as what to expect out of the assessment. Again, it's not going to be verbatim questions, but it's a very good indication of what you're going to see. So the assessment is worth 50 points. So it's worth 50 points, and you have 120 minutes to complete it. So you have 2 hours to complete it. You have plenty of time. Take your time when doing this because it is 18 questions, and they are all multiple choice questions. So there's no short answer, no true and false. 18 multiple choice questions. So stuff you're going to have to know is we went over managerial accounting in the PowerPoint. So know what managerial accounting is, which it's the area of accounting that involves the preparation of internal reports for firms' executives and the analysis of the data in these reports to aid in decision making. Public accounting, on the other hand, provides 3 major types of services, which are auditing, tax, accounting, and advisory services. So know those 2. Again, public accounting, because there's another similar question on this, involves auditing, tax, and management advisory services. It does not, again, it does not involve investment services. Know that expenses involve the outflow of money. A firm issues periodic reports called financial statements. We went over those, the profit and loss and balance sheet. Again, those are called financial statements. Very important that you know that assets equal liabilities plus owner's equity, because if you have liabilities of $4,000 and equity of $15,000, that means your assets are $19,000, which is $4,000 of liabilities plus $15,000 of equity to get total assets. So know that fundamental accounting equation: assets equal liabilities plus owner's equity. There's questions, so similar ones on the assignment that we just went over. So if I told you that I purchased equipment with cash, then that would mean you would increase your equipment and decrease your cash. Same with revenue. So increases in revenue are recorded when services are performed for cash or credit clients. No, unfortunately, this, Teresa, is the only live session. I know they try to make it where it didn't interfere with anyone else's, but it is, like Bedford just said, it is recorded. So I will have this posted as an announcement in my class right here. You'll see it will be called like week 1 recorded lecture, and I'll have this where you can watch it over and over again, and so will the other professors, because I'll send this over to them. Like, again, you may not have me as your instructor, some of you, but they will have this lecture and they should post it in announcements. If they don't, then just let them know. Maybe they forgot to post it, but again, usually every instructor is pretty good with that. But yeah, that's the good thing. These are recorded lectures. We saw when the owner invests cash in a business, assets and owner's equity increase. So when the owner invests cash in a business, remember your assets and owner's equity increase. If a company purchased equipment on account due in 30 days, when you finally make that payment, you're going to decrease the liability. So again, if you purchased equipment on account in 30 days, when you make that payment, your liability is going to decrease. And again, can't stress enough, make sure you know total assets need to equal total liabilities plus owner's equity. The balance sheet, remember, that shows the amount and types of property the business owns, the owner's interest, the amount owed to creditors. It does not, again, does not show the owner's investment. And the definition for the balance sheet is it shows the financial position of a business at a given time. Examples of assets include cash and accounts receivable. And again, the accounting equation, assets equal liabilities plus owner's equity, is represented on the balance sheet. Questions which we saw on the Chapter 1 PowerPoint, dealing with what type of information is communicated by financial statements. Know those questions. Again, I'll pull that up. Where was it? So these PowerPoints, which are right in the class, know these questions, because there is a question on the exam asking which is not a type of information communicated by financial statements. And one of those questions that will not be asked would be how long the business has been in operation. Again, how long the business has been in operation is not answered by the financial statements. And one of the slides that wasn't up here was the accounting cycle, but I believe there should be a 9 or 10-step accounting cycle in your book. Know that because there is a question surrounding the accounting cycle. So, for instance, after transactions have been posted, the next step in the accounting cycle is to prepare the worksheet. Again, the next step would be to prepare the worksheet. And I remember that slide being in here, but for some reason it's not. So that is your exam in a nutshell. Again, before you take the assessment, I can't stress enough, read chapters 1 and 2, review the PowerPoints for chapters 1 and 2. Of course, ask me questions if you're confused. Make sure you watch this lecture, rewatch it. Listen to the last 10 minutes of it, because that's a very good indication of what you're going to see on the exam. So very important to pay attention to what I went over in the last 10 minutes. I know that's a lot to take in for you guys, but hopefully it was helpful. Do you have any questions for me? I know there's a lot of people in here. Good. I'm glad you liked it. That's what I really try to make these sessions as informative as possible. That's why I always tell people to watch them constantly. Where am I calling? Where am I from? Is that what you're asking, Mike? I am in good old Pennsylvania, where it rains all the time, I swear. But yeah, I'm on Eastern time, so it's actually 9 o'clock here. So I believe it's 7 o'clock Mountain time and probably, 6 o'clock Pacific time, I'm guessing. Eight o'clock Central. Okay. 6 my time. So everyone's from different parts. 6:10 in Arizona. Yeah, so that's why I think this time it seems like got Bedford in North Carolina, Georgia. Oh, wow. Everywhere. That's what makes online. Texas. Wow, California. That's what makes online learning so convenient, because you can do it from anywhere. But yeah, that's why I feel this time, it's works the best for everyone, and I can tell by, the amount of people we had in tonight's lecture, it definitely worked out the best. So keep in mind, this is the only instructional session, but remember that you have all of these lab hours with various professors. So again, there's, I think, 10 sections of this, and you can see this where we are right now, the 6 p.m. live lecture, and then all of these are lab hours, meaning you come to them and you can ask specific questions. So definitely take advantage of those. Yeah, I will be the instructor every week. So unfortunately, you guys are stuck with me for the next 3 weeks after this week. So I know how excited you guys are. In the lab, I have actually never done a lab before. I always end up doing the instructional sessions, but from my understanding, the lab is simply like a tutor session. It's an open lab, an open forum. You can come in and ask questions. So the other sessions are open lab times for you to come in to ask questions, work through example problems, and practice actually doing accounting. So I have a feeling it's going to be, again, it's an open discussion forum. So if you have like 20 people come, then it might be a first come, first serve basis or whatever they're talking about. So keep that in mind. And no, I won't be grading other work. If you guys, like how Sean says, she has a woman instructor on his page. That's his instructor. So sure, post my live lecture in her class, but I won't be grading the work. She'll be grading your work. Or like Ginger, your instructor, will be grading your work. But whoever has me, I'll be grading their work. I know it's a little confusing, but that's why I always like to explain the mega course. Any other questions for me? Like I said, even though if you have questions and I'm not your instructor, again, always go to your instructor first for help. But you can always come to me for help too. Just let me know that, you have a different instructor. All right. Yes. Thank you, guys. Have a great evening. Yes. Thank you. All right. I'm going to go ahead and end the lecture. Like I said, if you have questions, email, call, or text me. But enjoy the rest of your evening, guys. Thanks for a great lecture.